Good morning, everybody. This is Jim McDaniel with URL Insurance Group. I'm the Marketing and Technology Director, and I'll be getting us kicked off for our third COVID-19 insurance news update. As we know, insurance is a life-sustaining, essential business, and we're going to continue to hold these weekly and update you with important industry news. The webinars will also serve as a place where you can get your questions answered if you have anything related to the pandemic and the insurance realm. If you have questions as we go through the webinar today, please use the questions panel to send them over, and we'll read any of them aloud at the end. I'm also going to flip over really quick to our COVID-19 insurance news webpage, where all these recordings of the webinars are archived, various newsletters that the departments put out, and then a new feature that we added this week is a question box where you can submit anything that you have related to the webinar. We'll include your questions or content that you may have, but on this page there's a variety of webinars in relation to COVID-19 and insurance and what we've done, various resources, as well as archived previous COVID-19 insurance news webinars. Let's flip back to the presentation. So these are our presenters today. We've got Deb and Thomas and John from Health Plan Options, Steve and Matt from Life Markets, Joe on the Annuity Solutions side, and Karen on the Medicare offering side. Kind of flip the order around each week. So here we go.
Good morning, everyone. This is Thomas Purcell from the Health Plan Options Group. Happy Friday, and thanks for joining us. Let's get right into it. Next slide, please. So some updates on Pennsylvania news. House Bill 613 was passed in the House on Tuesday and the Senate on Wednesday. It would allow certain employers to reopen their businesses and get workers back to work within the next 3 weeks if they followed CDC guidelines. Unfortunately, Governor Wolf and Lieutenant Governor Fetterman both said that Wolf is going to veto this. The Governor Wolf and our state health secretary just said they think that it's too premature. So that was promising that it passed both the House and Senate, but it's not looking good for the governor to sign off on that, unfortunately. Next slide, please. So Governor Wolf joined a regional task force with governors from New York, New Jersey, Rhode Island, Delaware, and Connecticut to essentially work together on a plan to reopen their states. Governor Cuomo from New York yesterday came out and extended their stay-at-home order to May 15th. Governor Wolf, our governor, is not yet ready to do that. And currently, April 30th is the current deadline for PA. So we'll be watching that closely. Next slide, please. On Monday, Governor Wolf issued new mandatory guidelines for essential businesses that goes into effect on 8 p.m. this Sunday. Some of those mandatory guidelines include employees and customers must wear face masks. Businesses must install shields or barriers at the checkout areas. They're required to stagger work schedules to limit number of people in a given workplace. And or take other measures to ensure that the social distancing of the customers from the checkout personnel is adhered to. Next slide, please. So that's it on the PA news that we have currently. We'll be watching that closely. For some federal updates, yesterday the U.S. Small Business Administration announced that they won't be accepting any more applications for the $349 billion Paycheck Protection Program. The Senate proposed to add a $250 billion to that plan, but that failed. Unfortunately, there's no bipartisan agreement currently. They're going to meet again on Monday but essentially some members of Congress want a bill that's only going to include the small business funds, and there's opposing Democrats that want to add $100 billion for hospitals and an additional $150 billion for states and additional food assistance funding. So that seems to be the dilemma. Hopefully they're going to move swiftly, because that right now there's no more money available for small businesses, unfortunately. President Trump issued guidance yesterday, opening up America again is what it's being called. He's leaving up to the governors to reopen their states gradually. The Trump administration has released some information on that guidance. Essentially, it's 3 phases of reopening their states gradually. Phase 1 would be, avoiding socializing in groups of more than 10 people, minimize non-essential travel. Businesses would be encouraged to still telework if possible, but could return to work if adhering to CDC guidelines. Phase 2 is a little more lax, allowing social settings of 50 or more people to gather. They open up non-essential travel that could resume, and then all the way to phase 3, where they would consider, people would need to consider minimizing the amount of time they spent in a crowded environment with no cap on that. And then employers could resume unrestricted staffing at their work sites. So 3 phases. Trump's leaving it up to the governors. It looks like that could be a long process, but we'll be following it closely. So those are the updates I have. Thank you for your time. I'm going to pass it on to Deb Wilkinson.
Good morning, everyone. Thanks, Thomas. You've done a good job of keeping up with all the changes. It's certainly up and down with everything going in and then not passing or vetoed. So it's been crazy. So good job on keeping up with all of that. Some of the extensions or delays in deadlines that the COVID-19 has caused is the tax deadline. Filing deadline has been extended from our normal 4/15 to July 15th. So that also, as a byproduct, allows people that have HSAs or ARCH or MSAs to also contribute until July 15th. So that's a good byproduct of this terrible disease. And of course, the limit has not changed, but again, you can file up until the time you file your taxes if you've not done that yet, up until July 15th. So that's some good news. Go ahead and the next slide, please. Of course, the telemedicine, this has been a big push since the COVID-19 coronavirus, and part of the CARES Act actually went a little further and allowed for the telemedicine free or co-pays to be allowed on a qualified HSA health plan without negating the HSA benefits. That provision is allowed from March 27th through the end of next year, December 31st. So that's a positive as well. Go ahead with the next slide. So claims reimbursement, this actually went into effect January 1st, but I do think with all the, the over-the-counter meds, that it's a good thing. So I thought I'd make mention. This particular memo came from Health Equity, which is our personal FSA and HSA vendor. But members can submit claims for menstrual care and over-the-counter drugs without a doctor's prescription. So that's the big change. And the date of the purchase must be after December 31st of 19. So that's a good change. Dependent care FSAs, typically members within a Section 125 can't change their elections without a qualifying event. This has become a qualifying event for this dependent care election. So members can update their elections. It just has to be appropriate to the change that is occurring. For instance, if daycare is closed down, they're not going to justify increasing that contribution to the dependent care FSA. Most folks know that the max is $5,000 between husband and wife or mom and dad, and that doesn't really begin to cover it anyway. So I suspect that most people will continue with the same elections and not reduce those. Go ahead, next slide, please. This one's interesting from PrimePay, who is our COBRA partner. They've actually come out with premium billing account for those businesses that have furloughed employees and are participating in that premium, premium payment. PrimePay can set up an account without any contract, and it's a per month occasion where they will actually bill the insured or your furloughed employee, and they will send this in, and of course then that's going to be allowed to, it will go into the account for the employer, in other words, and then pay the premium. So that's going to help. If you want more information on that, just give me a call. And just last but not least, the qualified disaster accounts are also something new. It's a QDA, so we need another acronym in this industry, but it's a $250 minimum, no maximum, and it's a 90-day COVID-related expenses, whether it's medical or non-medical, and an employer can set that up. I don't have information on the slide, but if you have some questions on that and want to talk more about it, give me a call and let me know. So right now I'm going to turn it over to John Reel. John is our manager of the benefit administration within the Health Plan Options Department. So John, take it on.
Thanks, Deb. Good morning, everybody. So if you joined us last week, I talked about Ben admin systems and how they can be used to communicate with employees from anywhere. This week, I want to focus on the importance of considering a Ben admin system and some additional ways it can benefit you. With everything going on right now, the way we do business and meet with people is changing. It's going to continue to, so it's important we have a process in place that allows us to communicate important notices and also election details without being in the same room as other people. Depending on the option that best suits your group, you can add to employee satisfaction by offering voluntary benefits, and this is going to do a couple things. It's going to decrease payroll taxes, and it's also going to decrease taxable income. You also have the ability to show employer contributions, which displays the true cost of products while also highlighting employer-paid benefits such as life, disability, dental, and vision, which often go unknown or underappreciated to the employees. So how it works is we figure out the best fit for the group, and we get them loaded into the portal, and then you decide on the type of enrollment support that you want. The employees are going to receive an email letting them know to log into the portal and make their elections. And as they go through the enrollment process, they'll see a sort of shopping cart similar to what you'd see shopping on Amazon. It's going to show their contributions so they know exactly what their total is as they go through the enrollment process. And we also have the ability to map election forms, but we can also submit the data electronically to the carriers as well. Another option you have is where the employee calls a toll-free number to enroll in their benefits, and we'll speak with a trained enrollment specialist who will review the available options for them and how they best meet the employee's needs while also fitting into their budget at the same time. And lastly, there's lots of benefits to these systems for the employers, employees, and the agents, but it's difficult to sum up everything in just a few slides. So please don't hesitate to give us a ring to discuss how one of the systems that URL offers could work for you. And now I'd like to pass it back over to Deb.
Thanks, John. I appreciate it. So as you can imagine, and I'm sure from your experience, you are getting inundated with some information about the coronavirus, COVID-19. What we've been trying to do here at URL behind the scenes is kind of pull all that information and put it in easy to use resources that you can use either for yourself as a resource or you can use for your clients. For example, we have a summary of how the carriers are handling furloughed employees, re-entry back onto the group, payment deferments, cancellation, etc. And we also have another flyer on how employers can exempt themselves from the Families First Coronavirus Response Act for the emergency sick leave or the expanded family medical leave. But all of these things are because of the information we're getting, but also because of the questions that you're asking. So as Jim mentioned at the beginning of the program, if you could just advance, please, we do have that new resource, and get your questions answered. Again, go to our COVID resource page, ask those questions, and that's also going to drive the content to better serve you. And also, the more questions asked, the more people hear the answers, including ourselves, and the better resources we are for you and you are for your clients. So with that said, I have the pleasure of handing it over to, I'm sorry, one last slide. Dina McVicker from our Colonial Life is offering some virtual meetings. They were previously done in-house, where Dina would come in and review your block and look for holes and opportunities to help, fill in those gaps of coverage. So those are still going on. It's just a virtual meeting, so please take advantage of that. Again, you can go to the Health Plan Options site, portion of the site, or go to our events. And now with that, I have the pleasure of handing it over to Steve Clemens, our Vice President of Life Markets. Good morning, Steve.
Good morning, Deb. Good morning, everybody. Thank you for being on the call today. Again, happy Friday, and I hope you had a good and productive week. Before I get started, we do have some handouts on the life side as well that are relevant to the presentation here and the information that we'll go through. So before you leave the webinar, please download that information and that content to take along with you. A couple updates from Life Markets. It is adapting to a new normal today. As you can see here on the slide, Zoom meetings are becoming more prevalent, social distancing, and all of that. So life carriers, it is a very fluid situation. They're making temporary changes to their underwriting. Many companies are postponing clients who are either above age 70 or above age 80 for coverage for traditional life insurance coverage, not final expense, but for traditional term or universal life, what we would consider medically underwritten business. So reach out to your case managers, reach out to myself and the marketing team on the life market side for updates with the companies that you write, because each company has a different guideline. Also, if your client is a substandard risk, depending on their age, if they're a table 2, a table 4, a table 5, there's some postponements there. So again, give us a call at URL for updates with a company that you are presenting, that you are writing. Also check our COVID-19 information on our website. And our website is obviously in the bottom right-hand corner of all these slides. And you can go right there and get that information. So moving on. So why do we buy life insurance? Well, our clients are buying life insurance for many different reasons. But the top reasons that people buy insurance, statistically speaking, are for income replacement, final expense needs, and to protect their mortgage. Those are the top 3 reasons people purchase life insurance. So obviously, if you're married with kids and you have an income, you have a mortgage, you definitely need to protect that income and that mortgage for what could happen. And then also on the final expense side, on the back end of life, where you want to protect your family from those final expense needs, burial expense needs. So 1 in 5 people with life insurance say they don't have enough. And statistically speaking, that's very true. The people that do have life insurance are underinsured. And moving on to the next slide, 43% of Americans aren't protecting their loved ones with life insurance. So we have a great opportunity out there. Many of us who work with clients, whether it be on the health insurance side or financial planning side or employee benefit side, we have good numbers out there to talk life insurance. 43% of Americans do not have life insurance. And of those that do, the great many of those are underinsured. So it's a great opportunity right now when people are concerned with their health and their well-being to talk about life insurance protection for their family. More than 1/3 of households would feel the financial impact within 1 month if their primary wage earner died. That's staggering. So again, additional life insurance protection for the clients you're already serving will go a long way. So I like to say, we have $1 a day life insurance concept. So a latte a day, $4 a day. Life insurance, $1 a day. So, I love Curb Your Enthusiasm, Latte Larry's great lead into this sales idea. So please take a look. Next slide. We like to say a buck a day goes a long way. So I'm going to put my family out there. This is the Clemens family. It's myself, Steve, my wife, Julie, my son, Cooper, and daughters, Delaney and Addison. So our kids are 12, 10, and 8. This is a family vacation last summer out in near Colorado Springs at Garden of the Gods. And you'll see a couple slides of our family. And again, it's just getting back to getting life insurance on the real basis. It's not always a commoditized sale of who has the cheapest life insurance out there. Going onto the quote engine, running a spreadsheet. It's about the benefits. Think about the family you're serving. Think about your families like my family that have 3 young kids at home. Think about what that extra life insurance would mean. They may already have purchased life insurance through you. So this isn't a sales and marketing idea to replace what they already have. It's to add on. Remember, most Americans are underinsured. So this is just something you can do, $1 a day, to get them additional coverage to protect their family. Let's go to the next slide. So life insurance protection. With Foresters Financial, a $100,000 20-year term is essentially going to provide each myself and my wife, Julie, life insurance, an extra $100,000 to protect our family each for the next 20 years. And you saw my youngest is 8 years old. That's going to take my youngest to 28 years old. You know, knock on wood, she's out of the house by then and on her own. So it's a good extra protection. Think about mortgage protection, that income replacement. Think of those things out there. If we want to add a child benefit rider to that policy, it's just an extra $5 a month, not per child, but for all 3 kids to cover them until they reach age 25. Next slide. All right, so again, with Foresters, we're not only talking about life insurance protection, but we're talking about additional benefits to serve that family. So if we can go back a slide, please, thank you. Foresters Financial provides member benefits with any life insurance policy you buy at $10,000 or greater. One of the benefits that Foresters provides is a college scholarship benefit. This is huge. When you talk to your clients about the college scholarship benefit, if they have 3 young kids at home like I do, and they're trying to save for college, which seems like you can never save enough money for college these days, a little extra goes a long way. And from a life insurance company giving back, giving those additional benefits, it is certainly something that your clients will listen to. With Foresters, they have a competitive college scholarship. So when my kids reach, seniors of high school, they can apply for a Forester scholarship. They have to have a 2.8 grade point average. That's a B average. That's not 4.0, valedictorian, salutatorian. That's just an average student with 40 hours of community service in the last 2 years leading up to the application. So they have those requirements in. They write a short essay, 250 words, and a reference letter. This is available to children of a policyholder and grandchildren of policyholders. On top of that, they have an orphan college scholarship benefit. So if I have a policy or Julie has a policy, we don't both have to have a policy with Foresters. If one of the 2 parents passes away, that's a $1,500 a year scholarship renewable for 4 years. If it's a single parent household, those children would receive $3,000 a year in college education. And if both parents tragically passed away, the kids in that family would get a $6,000 a year scholarship renewable for 4 years. And again, any of those children can apply for the competitive $2,000 scholarship as well. All right, moving on. So the other benefit that's really attractive is the orphan child benefit. Now here's a picture of the kids. This summer we were up near West Point, and we stopped at the West Point campus. And if you've never been there, it's a beautiful campus, and unbelievable, unbelievable experience to go there. So that was this summer, or actually, excuse me, that was this fall in September we went out there. But the orphan child benefit, if mom and dad pass away, and I always use the example, you know, Friday night, mom and dad are going out on date night to the movies and to dinner. You know, we're in a new normal now. What if mom and dad don't make it because of the COVID-19 pandemic? The kids in that family receive or the guardians of the children get a $900 per month benefit per child to help raise those kids until they reach age 18. So in my situation with a 12-year-old, a 10-year-old, and an 8-year-old, that's $2,700 a month for the guardians of my kids to help them raise my children. That's over $226,000 that they're going to get to help raise my kids. That's separate from the life insurance benefit. Moving on. All right, so additional benefits are living benefits. There's a lot of talk in life insurance today about living benefits. Everyone should be familiar with the terminal illness living benefit. That's been around for a long time. I've been in the industry 20 years. It's always been there. That's if, you know, someone's terminally ill and going to die in the next 12 months, you can take out, depending on the coverage, 50 or 75% of the death benefit. That's there, of course. But we have a critical illness and a chronic illness benefit with foresters. Critical illness, if myself or Julie had a stroke, a life-threatening internal cancer, a heart attack, ALS, major organ failure, end-stage renal failure, Alzheimer's before age 75, those are all eligible critical illnesses, and depending on the severity of that critical illness, we could access up to 95% of that death benefit in cash. So again, paint a picture for your clients. God forbid, we all know, whether we're in our 30s, our 40s, or 50s, 60s, or 70s, we all know somebody who suffered from cancer within our friends. If a young family, a father or a father or mother has cancer, needs chemo treatment, needs radiation, they're probably not working or working very effectively. They're taking time off work. They're losing income. Having the ability to access a portion of the death benefit to help pay for those mounting medical bills, and Deb and her team could tell you about that, help pay their mortgage, their utilities, their groceries, that's going to go a long way. Now, on the upper end of the age group, going into retirement, you have a chronic illness accelerated benefit. So if you're unable to perform 2 of 6 forms of daily activity or have severe cognitive impairment, the triggers for long-term care insurance, you can accelerate up to 95% of your death benefit if you are chronically ill. That's going to help with long-term care, or not long-term care. That'll help with home health care needs. That'll help with nursing care, all of those costs associated with that. Moving on. So an additional member benefit Foresters has is Law Assure. Most Americans don't have a living will, power of attorney, and healthcare directives. Foresters can do that with their Law Assure benefit. They also have charitable benefit. They're a company with a purpose. And if you can go back, excuse me, a couple slides too, please. Community grants. Foresters has a purpose. So community grants, it's enriching lives of members in their community. Members are policyholders with Foresters. And right now, with the COVID-19, they have a community grant called Caring Through Crisis. So if you currently are a Foresters member, have a policy, or if you have any clients who are Foresters clients, this is something to talk to them about. Right now, they're providing a $250 grant to any Foresters member for safe, contact-free volunteer activities related to the COVID-19 pandemic in their area. So that means if they're delivering coffee to frontline workers or supporting a local food bank, they're helping those members with a $250 Caring Through Crisis grant. Next slide, please. Again, a company with a purpose. Part of the application, you can choose a 1% of the death benefit to a charity of your choice. Foresters provides that to your clients, and you can choose any 501c3 organization that is near and dear to your heart. Next slide. And again, they're a company with a purpose, giving back to the community. They do playground builds across the United States. Here's a couple slides of myself and 3 Foresters agents with URL that did a playground build a couple years back in Maryland, in the Maryland, D.C. area. From my left to right, that's Chris Walker, Melvin Irving, and John Richardson, who helped out that day. It was a great opportunity. So if one comes into your area, it's a great thing to take part in. Hundreds of people come out to help with these things, and we did this at a local elementary school. Next slide. So I'm a big Star Wars nerd. So myself and my family went to Disney this December, and I was very happy to go see the Millennium Falcon and all of that. So that's a picture of us in December down at Disney. So again, $1 a day, $1 a day goes a long way. So with Foresters providing extra life insurance protection for your clients, you're going to give them a death benefit. You're going to give them critical illness protection, chronic illness protection, terminal illness protection, college planning benefits, legal planning benefits, guardianship benefits, and a charitable giving benefit. That's a lot of benefit for $1 a day. Next slide, please. So who can benefit? Think of your clients, your friends, people you know who are new parents, who are young families, new homeowners. They're your clients and your future clients. Point of sale, it's a great, oh, by the way, we have this for your health insurance clients, your P&C, your property and casualty clients. If you're doing retirement investment planning and college planning, pretty much anyone in middle market America is underinsured or uninsured. This is a great plan to go with and to get them started with some life insurance. Next slide, please. So, in Pennsylvania, we have shelter in place. Other states we do. So how do we go about this during these times? Next slide. Well, with Foresters, it's a simplified non-medical process for ages 18 to 55 up to $400,000. That means no blood, no urine, no paramed exam, no APS. Policies are issued in hours or a couple days maximum, not weeks or months. They have term, universal life, and whole life for this simplified e-application process. So you can talk to your clients over the phone. We have a member benefit brochure that goes through all of the member benefits I talked about. There's a highlight sheet on the term also as an attachment you can download right now. And you can provide that member benefit information, talk to your clients about those benefits. And if they're interested in getting started, you can do an e-application over the phone, and you can access the e-application from URL's website. Next slide. Needing a quote, give us a call. Call myself, call Matt, call Joey on our life team. Go to URL's website and get a quote. Or you can access the Foresters quotes from your mobile device or even your PC by just going to forestersquotes.com. No www in front of that, just forestersquotes.com on your phone or on your PC. And you will be able to access their term, their UL, their final expense, and their participating whole life quotes right there from the ease of your smartphone. And very easy to do. There's no password that you need to put in. So very easy way to get a quick quote for your clients. Next slide. So getting started, identify those clients and opportunities. Review their existing coverage if you currently have life insurance coverage or they have life insurance coverage with you. And then contact us at URL with any questions. We'll be happy to help. And use the policy review handout, which is again the handout, as a sample script. So when you pick up the phone, you have something to talk about. And I love the quote from Mark Twain, "The secret to getting ahead is getting started." So right now, while you're sitting at home looking for another opportunity, again, the secret to getting ahead is getting started. Next slide, please. So keys to success: use that policy review script, download the Forrester's term information, the member benefit information, and when you call your clients, have a clear message. Be prepared for the call and have fact-finding questions and solutions at your ready. Give us a call at URL. We're here to help, and I appreciate your time. With that, I'm going to pass it over to my counterpart in life markets on the final expense side, Matt Alina.
Thanks, Steve. Good morning, everybody. Steve had mentioned in one of his earlier slides about the reasons people buy life insurance. And the number one reason why people buy life insurance out of all of those reasons is to cover final expenses. Now, a lot of people think that final expenses or final expense insurance is just money that goes from the insurance company to the funeral home to pay for a funeral. That is not the case. A final expense policy is just like a normal life insurance policy where the insured gets to name their own beneficiary, whether it's a spouse or children, grandchildren, somebody that has some what they call insurable interest. Those are the people who are the beneficiaries. The beneficiaries then can utilize that money at the directive of the insured to pay for a funeral, pay for medical expenses, credit card bills, car payments, a whole mess of things. So last week, we discussed what is final expense life insurance, and I just want to discuss it a little bit more again, and that it's a simplified issue plan, very similar to what Steve was talking about with non-medical plans. There are no medical exams. There are no medical records that are needed. Policies are issued usually in the same day, or within a couple of days. A final expense life insurance policy, which is not what you see Alex Trebek advertising on television. These are permanent whole life insurance policies, meaning the rates are locked in that day and the benefit is available, most times available day one. They don't have to wait for a couple of years before that policy pays out full benefits. Now, there are some situations where they would have to get like a guaranteed issue plan. But these are permanent whole life plans where the rate is locked in and the client, as long as they pay the premiums or somebody is paying those premiums, they will never outlive the coverage. Final expense life insurance plans usually have benefit amounts starting at around $5,000 and they will cap out around $25,000. But there are some companies that will start at $1,000 to $2,000, and there are companies that will cap out at $30,000, $35,000, $40,000 or higher. The sweet spot for the final expense plans range anywhere from ages 50 to 80, but again, there are companies that start at as early as 2 weeks old and plans that go up to age 85 or even 90. Underwriting for final expense plans is very liberal. What I mean is that these plans are going after older clients. Clients have some pre-existing medical conditions like heart attacks, cancers, strokes, and a bunch of other things. So the underwriting is very liberal, and they accept a lot of these people with these pre-existing medical conditions. And like I'd mentioned, policies are issued usually within that day. You can usually get an underwriting decision same day, with policies going out in the mail in a couple of days, max 5 days. And if you're looking for a cash flow, a very fast cash flow, because these policies are issued quickly, commissions are paid quickly. Commissions with most of the carriers are paid daily. So as soon as a policy is put into force, usually within 24 to 48 hours, you can check your bank statements and you'll see that the commission was paid out. Next slide, please. For those of you who are in the group and employee benefit marketplace, final expense is an awesome idea for people who are going into retirement, or maybe they're changing jobs, or they're leaving their employer, or maybe the client or that employee has been terminated. A lot of times you'll find that the benefits that you get through your employer typically are not portable. These final expense plans are personal, it's personal coverage, and it's available to anybody. and it's a quick way to get them some coverage when they make those changes. And again, same liberal underwriting, and wherever that employee goes, whether it's retirement to a new employer or whatever the case may be, if they leave their current employer, that policy that they purchased will go with them. And for our Medicare advisors on the call today, Medicare clients and final expense clients are basically the same for the most part. You may have some clients that are concerned about leaving family debt, and we talked about final expense. So if you have clients that are worried about leaving medical bills behind or paying for that funeral, or they're going to have to take up a GoFundMe page to pay for their funeral or last expenses, a final expense plan is a good fit for that. Maybe some of your senior clients have lost money in their retirement savings. With any kind of investment, any kind of savings, the value there's that time value of money. And it may take a couple of years for them to get back to where they were. Hopefully not. But a life insurance policy can bridge that loss. So if they lost $25,000, $30,000, then maybe that was earmarked for leaving it for their spouse or their children or grandchildren. A life insurance policy can make up some of that loss in retirement savings and bring back some of that money without having to wait for that long period of time, just in case they do pass away in the next couple of years. And lastly, seniors that are wanting to leave a legacy. As I had mentioned, you don't have to name the beneficiary as the funeral home. You can leave the money to children and grandchildren. So those are some sales ideas using final expense life. Next slide, please. For those of you who are in different markets, maybe you're not well versed in life insurance, Karen McDaniel last week had brought to your attention the Orion Concierge Referral Services. That's also available. It's on our website. You can submit the client contact, and we can work on your behalf. And the best thing about it is we'll work on your behalf. It is still your client, and you're still going to make some money on that deal as well. So if you are not comfortable with talking about life insurance, final expense insurance, or whatever the case may be, you can certainly utilize our Orion referral program. Next slide, please. So whenever somebody says to me, I have good news and bad news, I'm the type of person that likes to get the bad news first. So for those of you who are on the call today, that maybe you have a Gerber life contract and you have clients that have Gerber life policies, you may have received the bad news is that you may have received a notification that clients have passed away. You may have received these death claim notices, and usually with death claim notices, if the policy is within the first couple of years, your commissions is charged back. And so what has happened this past week is that agents got this notification. They called the families to offer their condolences and found out that person is still alive. So the good news is clients are still alive. There was a glitch in Gerber's system, which they are correcting, and there are no commission chargebacks. So just wanted to give you some bad news, good news, and I guess it's kind of fitting for the week right after Easter. So next slide, please. You may have received this email earlier this week. We have a COVID-19 sales challenge. You've heard about COVID-19 and how it's really kind of delivered lemons to the industry and to make lemonade. Well, this is a way to add some sugar to that lemonade. So as the industry as a whole, we provide safety and security and, most important, assurances. And most of our clients are at home and they're waiting out that pandemic. So this is a way for you to kind of get started, get motivated. You know, every day we're one day closer to getting back into the swing of things, being able to go and meet with clients. So this is a way to be proactive. This is a way for you to stay in touch with your clients and really provide some sugar to that lemonade that your clients are looking for at this point. You're bringing some assurances out of chaos for some of your clients. So the COVID-19 sales challenge is contact 19 clients, whether it's per day or week, and check on them, see how they're doing, review the insurance coverages that they provide, the coverages that they provide, make sure that, that they understand what they have. If it's a Medicare plan, let them know that, if they happen to get COVID-19 or they happen to get sick, what their coverages are going to provide them. Same thing is with life insurance or annuities or anything else. This sales challenge is actually great for any department with URL. And when you're talking with the clients, like Steve had mentioned before, call with the purpose. Check on them, see how they're doing. And then as you're talking to them, see if there are other opportunities to serve your clients. Now, we do have the COVID-19 sales kit. You can respond to the email that was sent out. If you didn't get the email or you need that sales kit, feel free to give me a call. I'll be happy to provide that kit for you. It's got sales scripts in there, some different notepads and things like that that you can utilize as you're talking to your clients. Next slide, please. So if you're looking to get in front of more people and do some prospecting while you're kind of homebound, we do have some different lead program options available. And these lead programs have been around for a while. We have direct mail pieces, we have verified teleleads, Facebook leads, and basic teleleads. All these have a cost to them, but this is a way to get in front of more people and to expand your business quickly, especially if you do the verified teleleads or the basic teleleads. The verified teleleads are $25 a piece. It's a 10 lead minimum order. All of these leads are exclusive. There's another lead program that was brought to my attention by one of your colleagues in the industry this week, and I decided to check it out. If you can go to the next slide, please. They are live transfer leads. They're $35, $38 per qualified live transfer. A lot of people are home. As you know, we're home. And the live transfer leads allows you to get in front of more people. You're making your own schedule. You get to determine your targeted demographic by the person's age, the amount of coverage that they're looking for, income demographics, all of that stuff. And the telemarketers will give you a warm handoff. So you're not doing any cold calling. You're not having to do any contracts. You get to focus solely on talking to people about life insurance and closing sales. And the other thing is, it is a US-based company, which means that these telemarketers are in the United States. You get to make your own schedule. You're logged in, and you get a warm handoff from the telemarketer when somebody is indeed interested in speaking to you about life insurance, final expense life insurance, or whatever the case may be. So if you're interested in live transfer leads, feel free to give me a call, and I'll be happy to share that information with you. Next slide, please. Last week, we unveiled our lead subsidy stimulus, and I want to talk to you again about it as we're talking about all the costs that are associated with getting leads, final expense leads. Understand that we do subsidize your lead costs based on your production. For our Gemini partners that are on the call today, normally we give you $80 for every $1,000 of paid final expense annualized premium each month. We're increasing that to $100 for every $1,000 of paid annualized final expense premium placed each month. For our standard partners, normally you get $50 for every $1,000. We're going to increase that to $75 per $1,000. So to give you an example, if you did $5,000 during this month, our Gemini agents are going to get $500 to apply towards a lead order, whether it's through one of our lead vendors or a lead vendor of your choice. And our standard agents would get $375 to apply towards a lead order, again, with one of our lead vendors or a lead vendor of your choice. I highly encourage you to please take advantage of this lead subsidy. It definitely cuts down on your marketing expenses, and the idea here is to get in front of more people to offer them final expense coverage and help grow your revenue and your sales. Next slide, please. As we know, we are stuck indoors, and a lot of states have that stay-at-home order. where we really can't get out there and see people face to face. These are companies that will allow you to do sales over the phone, whether it's where you have a client on the phone and you have the online application on your computer in front of you, or you can do a three-way phone call with the client, yourself, and the underwriter at the company. These are companies that are listed here that allow you to do sales and marketing over the phone, where you do not need to be face-to-face, belly-to-belly with the client. If you're interested in getting any quotes or any marketing materials, anything that you need, I'm here to help you with that as well. And while I hope everybody is staying healthy, stick with us and we'll try to make you wealthy and wise. So with that, let me hand it over to Karen McDaniel in Medicare.
Thanks, Matt. So really quick update for us, not really a whole lot of new news on the insurance side of things. Can you advance the slide for me, Jim?
Yep.
But we do wanted to bring to your attention 2 upcoming webinars that we're going to be holding. My counterpart, Christy Wilbert, will be interviewing 2 of our top Medicare producers next week and the following week. So on the 23rd of April, she is going to be speaking with one of our agents and how he is able to stay busy and successful during this COVID-19 pandemic and beyond, how you can use those marketing tools to go past this pandemic. And then on the 28th, she'll be speaking with another one of our top producers on how he became successful. And he has been a top Medicare producer for the past, he's won 2 top Medicare producer awards through URL. So he will have some marketing ideas for you. So we encourage you to register for those events. The registration will be in the COVID-19 newsletter that will be going out later on today. That's it for me. If you have any questions, please feel free to reach out to myself or Christy or anybody else in our Medicare offerings department. And with that, I will turn it over to Joe Corio, who is our Senior Vice President.
Good morning, everyone. Thank you for being on today. As far as the annuity front goes, agents are continuing to make sales. They're doing some virtual presentations, and then they are either writing up an application online, or they are writing up the application and sending it to the client for their signatures. And both of these methods are approved by all carriers. So feel free to reach out to us if you need some help with your virtual sales. We'll be glad to help you there. And also, I wanted to mention on the 9th of April, I sent out a white paper to agents, about 5 or 6 pages that covered a lot of the ramifications of the CARES Act, which was signed into effect on March 27th by President Trump. And whether you're making annuity sales or not right now, it's important to stay in front of your clients and let them know that you're worrying about them and you're trying to act in their best interest, even though you might not be able to see them face to face. And there's 2 things in that CARE Act I wanted to bring up to you today that could help. Things that you could reach out to your client and just stay in the forefront and make you look like the expert, whether they have an annuity with you or you know they have other funds. The first thing I wanted to point out was the CARE Act temporarily waived the required minimum distributions for the 2020 calendar year. So any IRA, whether it's Roth IRA or traditional IRA, they do not have to take their 2020 RMD. And I can't tell you, every week we have at least one call, sometimes more, asking how we can get around taking an RMD. Clients don't want them. A lot of people don't want that money because at the end of the year it's taxed and they're not going to use it. They don't need it, additional income. So this is huge. So any senior clients you have, if you're a Medicare agent, a final expense agent, or annuity agent, reach out to those senior clients and see how they're doing and remind them that they don't have to take an RMD for 2020. This will set you up as the expert, the financial planner that's going out of their way to make sure people are staying informed. The other aspect of the CARE Act I wanted to bring up to your attention was has to do with people who are under age 59 and a half. The CARES Act gave people under 59 and a half the opportunity to take a free withdrawal from their IRAs or their company plan, such as a 401k, without a 10% early withdrawal penalty. And sometimes that sounds great on the surface, but sometimes there are ramifications of that. And the ramifications of taking money out of your retirement plan, if you don't really need it, could hurt you in the long run. First of all, if you take out, the plan allows people to take out up to $100,000 anywhere between January 1 and December 31 of 2020, if it is a corona-related distribution. And that would be a person who is diagnosed with the virus, or whose spouse or dependents test positive, or a person who experiences adverse consequences as a result of being quarantined, laid off, furloughed, or something of that nature. So first of all, you have to be eligible. But the problem with taking it out is it could put you in a higher tax bracket depending on how much you're taking out. So that has to be considered. And also, if you have, for instance, a 401k and you're taking out 20 or 30,000 or more, what you're basically doing is selling when your account is low. And people, that's not a good strategy. The old adage is buy low, sell high. Well, you're actually doing the reverse here. And I understand people might be in a real bind and they need money, but there might be some other options. So if anyone would like to, has a case or a situation like that, and you'd like to discuss some of the ramifications, please don't hesitate to reach out to me, and I will be glad to help you with that. Also, right now, a lot of people, believe it or not, because of the crisis we're in, are thinking about life insurance. And if you're in the senior market, long-term care benefits, or more importantly now, home health care, have more and more importance as we go on. So with that in mind, we are holding some webinars. The first one will be on Monday the 20th at 10 o'clock, and you can get that information on our website, or I think we sent you an email out in regards to that. But my counterpart, Jason Collins, will be conducting that, tell you how you can use life insurance, and that life insurance can also be used as long-term care, or more importantly, like I said, home health care coverage for their clients. So that's a great product. It's not being used to its maximum capabilities. So if you're not sure what single premium life with living benefits is about, this is a good webinar for you to join in on Monday at 10 o'clock. And also coming up, we have some CE webinars on single premium life with living benefits. They'll be sponsored by Nationwide, and there's a series of 4, so you can pick up some CE credits while you're home doing nothing. The first one is Thursday, April 23rd, and you see the other ones scheduled there on your screen. So if you have any questions on the single premium life or the upcoming webinars, please reach out to Jason Collins. He's at extension 156 here at URL. If you have annuity questions, Maria Adams at extension 102, and Cody Wilbur at extension 136, and I'll be here at extension 111. That's all I have for today. Please be safe, enjoy your weekend, and look forward to talking to you next week.
Okay, thanks a lot, everybody. A lot of great information out there today. If anybody has any questions, please send them over. We didn't get any throughout the call here today, but certainly thank you for taking your time to attend. Please visit our insurance news resource page at uralinsgroup.com/COVID-19. And I hope everybody has a safe and happy weekend.